In 2009, the landscape of finance began to shift with the advent of Bitcoin, heralding the era of cryptocurrencies. Powered by blockchain technology, these digital currencies introduced a new paradigm for financial transactions, faster, borderless, and independent of traditional banking systems. The cryptocurrency market has since burgeoned, with its valuation surpassing the $2 trillion mark, signaling a transformative shift in the global financial landscape. This explosion of growth, however, brings forth challenges, particularly in regulation. The rapid ascent of cryptocurrencies has outstripped existing regulatory frameworks, posing questions about stability, consumer protection, and innovation fostering. As we explore the regulatory landscapes of the USA and Canada, we aim to uncover how these nations are navigating the complexities of this new financial frontier, setting a precedent for global efforts in embracing the potential of cryptocurrencies while ensuring their secure and ethical use. The surge in cryptocurrencies' popularity contrasts starkly with the lack of clear regulatory frameworks, plunging the market into uncertainties. The need for regulation segment sheds light on the critical crossroad at which the financial world finds itself today. The absence of comprehensive regulations has spurred concerns over market volatility and the security of consumer interests. This dialogue explores the intricate balancing act between fostering innovation and implementing safeguards through legislation in the USA and Canada. By examining these nations' approaches, we unveil the significance of regulatory norms as foundational elements for ensuring the market's stability and future growth, underscoring the necessity of a prudent yet progressive regulatory stance in the realm of digital currencies. The global regulatory stance on cryptocurrencies presents a rich tapestry of approaches, mirroring the world's diversity. From stringent restrictions to enthusiastic endorsements, countries worldwide are crafting unique paths through this digital terrain. This exploration offers insights into the varied regulatory philosophies that govern the cryptocurrency market, illuminating the quest for a balance between innovation and regulation. By highlighting the journeys of the USA and Canada, we see how each nation's choices reflect broader themes of market freedom, consumer protection, and the pursuit of a unified regulatory vision. These examples set the stage for a deeper understanding of how varied regulatory frameworks can coalesce into a coherent strategy for managing the digital currency revolution. The United States stands as a beacon of technological innovation, its approach to cryptocurrency regulation characterized by a complex dance of oversight and guidance. Agencies like the SEC, CFTC, and FinCEN play pivotal roles in shaping the regulatory environment, ensuring transparency, market integrity, and combating financial crimes. These efforts highlight a commitment to nurturing the cryptocurrency market's growth while protecting investors and the broader financial ecosystem. By balancing innovation with regulation, the USA exemplifies a dynamic regulatory framework designed to support the flourishing of digital currencies. This strategy not only addresses current challenges, but also anticipates future developments, serving as a key piece in the global regulatory puzzle. Canada's stance on cryptocurrency regulation offers a compelling narrative of proactive engagement and meticulous oversight. Through a collaborative effort between provincial securities commissions and federal authorities, Canada has established a regulatory framework that prioritizes consumer protection while fostering market stability. This balanced approach demonstrates a commitment to leveraging regulation as a tool for ensuring a secure and thriving digital economy. By emphasizing the importance of collaboration and transparency, Canada sets a benchmark for how innovation can be harmonized with robust safeguards, contributing to the global dialogue on creating a resilient digital financial system. In the intricate dance of global cryptocurrency regulation, the imperative to balance innovation with consumer protection takes center stage. This ongoing narrative delves into the complexities of achieving consensus on regulatory policies that safeguard investors while promoting technological growth. By spotlighting the efforts of various nations, we recognize the importance of a harmonized approach to regulation that fosters stability and fosters innovation. This segment underlines the dynamic nature of regulation in the face of rapid technological advances, aiming to chart a course towards a secure and innovative financial future. The journey towards aligning regulation and innovation rests on adaptability and international collaboration. As we explore emerging regulatory frameworks, the emphasis on adaptability, consumer protection, and cross-border cooperation emerges as key to navigating the digital currency landscape. This underscores the potential for synchronized global efforts to create a regulatory environment that not only protects investors, but also nurtures technological advancement, highlighting the importance of a regulatory approach that evolves in tandem with the market's growth. At the nexus of innovation and security within the cryptocurrency domain, the quest for regulatory equilibrium is imperative. By embracing a proactive and collaborative regulatory approach, we can ensure the cryptocurrency market's stability and security without compromising on the spirit of innovation. Learning from the diverse strategies of the USA and Canada provides valuable insights into harmonizing innovation with consumer protection. This synthesis of flexibility, security, and innovation in regulation crystallizes the path towards a future where the digital economy flourishes, safeguarded by thoughtful and responsive policies. Our exploration of global cryptocurrency regulation underscores the ongoing evolution of policies in the face of the digital finance revolution. As stakeholders in this unfolding narrative, our engagement with the regulatory process is crucial. By staying informed and interacting with policymakers, we contribute to shaping a regulatory ecosystem that balances the benefits of innovation with the needs for stability and protection. This collaborative effort paves the way for a future where cryptocurrencies are both a secure and thriving component of the global economy.
The U.S., being a leader in technological innovation, also faces unique challenges in regulating cryptocurrencies effectively. As the industry is constantly evolving, different regulatory bodies have taken gradual steps. Commodity Futures Trading Commission, CFTC. The CFTC views Bitcoin and other cryptos as commodities and oversees crypto commodity derivatives like futures contracts. It has pursued enforcement action against platforms involved in market manipulation. Securities and Exchange Commission, SEC. The SEC regulates crypto token sales ICOs that are deemed to involve securities, relying on the Howey test. It requires such projects to register or qualify for exemptions. Many enforcement cases target unregistered crypto securities offerings that misled investors. Financial Crimes Enforcement Network, FinCEN. Part of the Treasury Department, FinCEN requires crypto platforms/businesses acting as money transmitters to register as money service businesses, MSBs, and comply with Know Your Customer norms to prevent money laundering. Internal Revenue Service, IRS. Cryptocurrency is treated as property by the IRS, and transactions are taxable as capital gains losses. Clear guidance has been issued around taxation of forks, hard forks, and airdrops too. Non-compliance can attract penalties. Office of the Comptroller of the Currency, OCC. The OCC allowed national banks and federal savings associations to provide cryptocurrency custody services in a landmark 2020 letter. This was challenged but upheld by a U.S. court. Other developments. The White House issued an executive order in March 2022 calling several agencies, including the Fed and SEC, to study potential central bank digital currency development. Several states, like Colorado, Arizona, are more crypto-friendly and exploring blockchain-related initiatives. Numerous congressional hearings have debated a comprehensive federal framework. Key pending bills. The bills aim to establish clearer rules around cryptos and give regulatory clarity, harmonizing oversight for Cryptocurrency Act of 2021, Cryptocurrency Tax Fairness, Exemption Act, Responsible Financial Innovation Act. However, passing comprehensive crypto legislation remains challenging.
Cryptocurrencies operate through decentralized networks that facilitate peer-to-peer transactions without any central authority. While this architecture provides benefits like censorship resistance, it also poses challenges from a regulatory perspective. Some of the main issues that have prompted calls for regulation include investor protection. Without regulations, investors have little recourse in case of fraud, theft, or manipulations by exchanges' projects. High-profile hacks and exit scams have led to billions in losses. Anti-money laundering (AML) risks. Cryptocurrencies can enable illegal activities like money laundering, terrorism financing due to pseudo-anonymity. This poses threats to national security and financial system integrity. Financial stability risks. Rapid growth and volatility in crypto markets could spill over into traditional finance if left unregulated. Large movements or major faults in crypto projects, exchanges handling crypto derivatives could cause wider disruption. Tax evasion risks. Without proper rules, crypto transactions can be used to avoid taxes on capital gains profits. This denies governments an important source of tax revenue. Consumer risks. Issues like lack of product disclosures, unfair trading practices by exchanges, and fraudulent initial coin offerings, ICOs, have harmed retail investors. Operational risks. Exchanges and custodians handling billions in crypto assets present risks of hacks and security lapses if not strictly regulated and monitored. Potential economic benefits. On the other hand, regulating crypto appropriately could help unleash benefits to the real economy from financial innovation and new technologies. This would give regulatory clarity to the industry while protecting the public interest. Hence, most governments agree that some regulation of cryptocurrencies is necessary for protecting their citizens, enforcing laws, and maintaining stability. The challenges lie in balancing regulation and oversight with the need for innovation in this new digital asset class.
Canada is cited as one of the most progressive nations in developing a balanced cryptocurrency regulatory regime. The different financial regulators have taken a collaborative approach. Canadian Securities Administrators, CSA, many CSA provincial securities regulators treat fundraising tokens that share characteristics of financial instruments as securities. They release guidance for ICO issuers to operate within securities law frameworks. Ontario Securities Commission, the OSC was an early global leader to clarify that cryptocurrencies and smart contracts could be considered securities based on the facts of each case. It has pursued enforcement action against illegitimate ICOs. Canadian Financial Intelligence Unit, FINTRAC. As Canada's financial watchdog for anti-money laundering, FINTRAC oversees virtual crypto asset service providers as money services businesses from 2021. New registration and compliance obligations came into effect. Canada Revenue Agency. Crypto transactions are taxable in line with existing income tax frameworks. Canadians must report capital gains losses from disposing of cryptocurrencies held for over a year as taxable capital gains, allowable capital losses. Bank of Canada. While not a direct regulator, the BOC, along with Finance Canada and others, are researching the potential development of a central bank digital currency, CBDC, for Canada. Other developments. The CSA and OSC periodically issue investor alerts related to cryptocurrencies. Multiple crypto ETF products were approved over the years after addressing securities law hurdles. Ontario launched a blockchain strategy aiming to leverage new technologies. Regulation-friendly stance. Overall, Canada aims to maintain an innovation-friendly regulatory environment for crypto blockchain firms while safeguarding consumer protection through a cooperative, principles-based approach involving multiple agencies. This balanced stance is attracting more crypto businesses.